Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, the Philippine peso falls to a fresh all-time low of 59.15 to the dollar. Where to next for the local currency and the markets? Jasper on that, Regina Capital joins us live. President Marcos says the signing of the upgraded ASEAN-China Free Trade Agreement would boost employment for Filipinos. He heads next to Seoul to attend the APEC summit. And the prolonged uncertainty over government corruption allegations is hurting businesses. We check in with Sergio Ortiz Luis Jr., Honorary Chair and Treasurer of the PCCI. He is also President of ECOP and PhilExport. The Philippine peso has reached an all-time low this morning. The peso depreciated further and for a ninth straight session on Tuesday to 59.13 against the greenback and also today on Wednesday. The peso opened at 58.90, its intraday best, before sinking to as low as 59.20 on Tuesday. Now, yesterday's close snapped a 10-month record as the peso finished at 59 to the dollar last December. The Bangko Sentral ng Pilipinas says in a statement, the peso weakness mirrors market concerns over a possible slowdown in economic growth brought about by anomalous infrastructure projects. Analysts also link the depreciation with comments from BSP Monetary Board member Ben Diokno, who said Monday that the central bank might cut key interest rates in December and beyond. The BSP has lowered rates by 175 basis points since its easing cycle began in August 2024. The Bangko Sentral explains that it's allowing market forces to determine the exchange rate. The BSP is keeping a healthy level of reserves to manage excessive volatility when needed. Mike Ricafort of RCBC says the government should institute reforms to prevent corruption in government spending and improve fiscal management, which can result in improved investor sentiment. But will the peso further sink to the 60 level? Here's what one analyst says.
It will. It is highly probable. The technical view is that the trend continues to highlight an uptrend for the currency, meaning there's continued dollar strength, whether it's the factor of slower growth and sometimes pattern precedes politics.
This Wednesday, the Philippine peso opens a tad weaker, further weakening to 59.15 to the dollar, with the exchange rate touching an intraday low of 59.26. Now, two global credit watchers have maintained their outlook on the Philippine economy despite corruption issues hounding flood control projects. Budget Undersecretary and Chief Economist Joselito Basilio said both Fitch Ratings and Moody's verbally affirmed their outlook on the country. Fitch kept its 5.6% growth projection and earlier maintained the country's BBB rating with a stable outlook. Meanwhile, Moody's last affirmed its Baa2 rating and stable outlook in August of last year. Basilio noted that while both agencies raised questions about the corruption probe, they did not see any impact on growth and viewed the probe as a step toward improving government processes. One research firm, meanwhile, expects the Philippine economy to slow further this year, projecting growth at 4.7%. Nomura's chief ASEAN economist Yuben Paracuelles and macroeconomic research analyst Yiru Chen cut their previous 5.3% forecast, citing mounting risks from the flood control corruption scandal. They estimate growth could ease to 4% in the second half from 5.4% in the first, assuming government spending continues to decline in the next few months. Nomura's latest outlook falls below the government's 5.5% to 6.5% target and the 5.7% growth recorded in 2024. They said the bad scenario from the scandal's fiscal impact is now materializing. The third quarter GDP data comes out on November 7th. A falling peso is a boon for exporters and overseas Filipinos remitting money home to the Philippines. But it is also a bane for consumers here, as everyone has reduced purchasing power with a weakened local currency. The peso falls to a fresh all-time low of 59.15 as it opens Wednesday morning here in the Philippines. The peso's record drop comes as business and labor leaders demand swifter action from the president to make accountable those involved in corrupt practices. With us now for more is Sergio Ortiz Luis Jr., Honorary Chairman and Treasurer of the PCCI, as well as President of ECOP and PhilExport. Good having you back on, Serge. Welcome to the program.
Good morning to who are watching us this morning.
Right. Well, first off, our eyes are all on the peso's drop to an all-time low, now at 59.15 to the dollar. Being part of PhilExport, how is that benefiting exporters?
Well, if I have a feeling that if you compute the real exchange rate now, and there's a formula to do it, it might count out at 60 pesos to a dollar. We have been always trying to depress the exchange rate, and I think we are forgetting the fact that a lot of Filipinos depend on the strong dollar now than the peso. How many OFWs do we have? You multiply it by a family of 5, and those are depending on that. Exporters, we wanted to grow export, and there were glorious days during the time of FBR, but now it's less than 30% share of the GDP, with less than our neighbors had, because we are not that competitive and we don't support export. And also tourism. We are lagging behind in tourism. We are lagging behind in domestic manufacturers because they're overtaken by imports. So we have to consider that. The only problem is in the Philippines, we have a lot of debts, and the debts will multiply with the exchange rate of Philippine debts. And the other thing is our import products will be more expensive, especially on Christmas. You probably have to forget importing a lot of apples and whatever there is, and substitute it with local. Even in
Let's tease that out, Serge, because a lot of industries get impacted, good and bad, with a falling peso. In terms of exports, how are Philippine exports to the U.S. now looking if we consider Trump's tariffs that came into effect in August?
Well, 1%. Are you talking about the 1%? No, the reciprocal tariff. Well, when we started, we were 20. We were brought down to 17. We were increased to 19. All our competitors in ASEAN were in the vicinity of 35%. They're all down to even lower. And there are 3 countries now: Malaysia, I think, and Cambodia, and that were given zero tariff in a lot of so we become more competitive. So I think we have to really look for other markets from the U.S. Our share in our export share for the U.S. is about 15% of our export, half of which is electronics. And from the U.S. point of view, that is 1/5 of 1% of their imports. So it's really not, So it shows that we're not really doing great with the U.S. Despite our being close allies.
But now that you've mentioned 60, do you think the target for semiconductor exports might be met? The semiconductor industry of the Philippines just said that they're seeing a single-digit growth in exports this year.
For this year, I think it will still be met. But we are worried about what they're going to do. Every week they change direction. So they might be giving our competitors like Japan, South Korea, Taiwan, some boost in electronics, and because they have manufacturing in the U.S., and I think that's the rule. We don't really our electronics industry here is basically U.S. Visitors, so they might just decide to leave us.
Well, let's pick up on the remittances. As you mentioned, it's going to be pretty good if the peso falls further, because a weaker peso is really a boon for those remitting money at home. But we're aware that Trump's big, beautiful bill comes to effect on January 1st of next year. So that means a levy of 1% tax on all the outbound remittances coming to the Philippines. So what is that going to mean for remittances to the Philippines originating from the U.S.?
Well, a big portion, but not anymore. Like before, it looks like all the remittances come from the US because it passes through the Bank of New York, no? But now I think a lot of them are coming from directly from the other countries, not anymore going to the US. So I don't think the 1% uh, tariff on it will make much difference to the OFWs remitting.
All right, well, that's pretty good news, but you did mention the imports of fruits like apples during this Christmas season. What do you think a weaker purchasing power for consumers and employees here would mean, especially at a time of Christmas when a lot spend for food, more for food and gifts to celebrate the season?
The only problem that we will have a problem is we import mostly our fuel, and that will be affected. We are just about the only country here, I guess, who does not support our fuel industry. As a matter of fact, we even subsidize it by the percentage that we have to add to support the coconut industry, I think. I think with all the money that we can save from the corruption, I guess we can afford anything. The government can start subsidizing fuel now and take away some of the tariffs that are put on fuel so that we can be, it doesn't have to affect the lives of our people.
Well, picking up on what you said, you've just had your fellow colleague Butch Guerrero come on this program yesterday, and he made a mention that a lot of the problem right now stems from the fact that there used to be visitors from overseas coming to the Philippines to try and want to invest here, but now nobody is visiting us. With a weaker peso, do you think that that might be an incentive for foreign investors to come back, despite the corruption allegations?
You know, exchange rate is not such a big thing for investors. These are things that they leave on a national, just prohibiting sudden changes. No, you know, in 2023, in the Philippine Chamber of Commerce, we have what, 2, 3 visitors, investors coming in, but they began to disappear, especially with the xenophobia that we started. The Chinese investors, I think, who was going big, going to overtake a lot of the big investors here, has disappeared. Some even who are investing are leaving us, no? And there is no replacement that we see. Before, when we try to go with the president to attract investor, beginning with the FBR at the time when he invited semiconductor industries and they came here. Those were the glorious days of export. Now, there's hardly anyone coming to visit and investors. And if they do, it's really exploratory, but it's based on the fact that we are looked at as very political and stable at the moment, and the corruption issue, I think, has spread all over the world, and everybody knows it. So if you're choosing investment, I guess the last choice will be the Philippines until we solve this problem. Unfortunately, we're very slow in doing this. While I know that the president is trying to do its best to do this, but there's a lot of agency in the government who are not showing that they're in step with it. Just to give you an example, the Bureau of Immigration, very difficult for, I don't know, we simplify the immigration process in other, here is very difficult. There's even one example that bothers the business sector. One of our members, Joseph C., who is now under detention, despite the fact that there is an order for him to be released by the lower court, by the Court of Appeals, they refused because they said they have new evidence. Well, there's a process for that. They have to release him and file cases, whatever, if they have new evidence. You know, in AI, uh, it's so easy to produce evidence. Maybe those are evidences that cannot stand in real court.
Okay.
Maybe they can.
Well,
Yes.
we'll have to leave it there, but thank you so much, Serge, for your insights. I much appreciate it. Serge Ortiz Luis Jr. of PCCI, ECOP, and PhilExport as the peso falls anew to a record of 59.15 to the dollar. Well, Malacanang has clarified the president did not order a price freeze on basic goods, but instead directed the Trade Department to strictly monitor commodity prices. Palace Press Officer Claire Castro said the president instructed the agency to work closely with manufacturers to prevent price hikes on basic and prime goods through the end of the year. She emphasized that the policy focuses on monitoring and coordination, not imposing a price freeze.
Alinsunod sa kautusan ni Pangulong Ferdinand Marcos Jr. na hindi magkakaroon ng paggalaw sa mga presyo ng mga bilihin bago ang holiday season, inanunsyo ng Department of Trade and Industry o DTI na walang price increase sa basic at prime commodities sa bansa hanggang sa matapos ang kasalukuyang taon.
The now 11-member ASEAN bloc and China signed an upgraded free trade agreement, the so-called 3.0 Free Trade Area. This new protocol will aim to advance the digital and green economies, supply chain connectivity, and the participation of MSMEs. During the summit, China's Premier Li Qiang pitched China as an alternative to the protectionist policies of U.S. President Donald Trump. For his part, President Marcos welcomed the expanded trade pact, but says it must be clear that this cooperation cannot exist alongside coercion. Meanwhile, Malaysia handed over the chairmanship of the ASEAN to the Philippines, which means the country will be hosting dozens of dialogues and summits next year.
As your chairship concludes, the Philippines is honored to take on the responsibility of leading ASEAN from 2026. We are committed to carrying forward your momentum and to implement on its first year the ASEAN Community Vision 2045 with purpose and resolve. We likewise remain dedicated to facilitating the further integration of Timor-Leste into the ASEAN family.
The president is also attending the APEC summit happening in South Korea this week. You're watching Money Talks. Coming up, how will the Philippine Stock Exchange Index react to the peso hitting a fresh all-time low this morning? We speak with Jasper of Regina Capital Development Corporation. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. U.S. markets hit record highs Tuesday following new AI deals and solid corporate earnings. The Nasdaq rose 0.8%, the Dow climbed 1/3%, and the S&P 500 advanced by nearly a quarter, just below the 6,900 mark. The benchmark 10-year Treasury yields ticked down to 3.982%. Gold prices tumbled to $3,966 per ounce as progress in trade talks between the U.S. and China sapped demand for havens. U.S. futures are little changed as investors await the Fed policy decision. The S&P and the Nasdaq are up by less than 0.1% each, and the Dow falls by 0.1%. Asian markets are a mixed bag this Wednesday. Japan is up 1.4%, fresh from its record close yesterday. South Korea's Kospi climbs by nearly 0.7%, and Australia's ASX 200 is down 0.6% as it reports a 3.2% inflation rate in the third quarter, the highest in over a year. Let's take a quick check on our own markets as the Philippine peso falls fresh at 59.15 to the dollar. That's a fresh low. And taking a look at the stock market, it has opened higher by about 0.1%, 5,961. Bargain hunting has kicked in on Tuesday, but the index still stayed below the 6,000 level. The broader all shares index climbed by 0.2%, with the local counters a mixed bag. The benchmark 10-year Treasury yields have ticked up to 5.992%. So to recap, the Philippine peso today opens a tad weaker. So that's a fresh all-time low as we speak at 59.15 to the dollar, coming all the way from its record yesterday at 59.13 against the greenback over concerns of slower economic growth and the expected rate cut. The dollar-peso exchange rates continued to strengthen after breaking out of a period of tight consolidation, says Ron Acoba of Trading Edge. And since that breakout, when you take a look at this chart, the currency pair has retested its all-time high of 59.08, previously reached in December of last year. Looking ahead, the exchange rate could maintain its upward momentum, says Acoba. And with this development, the pair may continue to rise, with 60 serving as its next immediate target. Joining us is Jasper Ondap, equity analyst at Regina Capital Development Corporation. Good to have you back on, Jasper. Welcome to the program.
Hello, good morning, Cathy. Thank you so much for having me today.
All right, I would have thought the index would have fallen as the pesos reached a fresh all-time low, but it didn't. It's holding up.
Yeah, so I guess, what will happen since Friday, we've seen really the drop quite drastically, about 1%, and then the next day fall comes another 1%. And Tuesday, we're just saying this bargain hunting at this point, but as USD PHP closed above 59, now doing, as you have said already, fresh lows at 59.15. So what really happens is more of a bargain hunting, or it's just really a technical rebound at this point, right? Because falling from 6,100, 6,000, consolidating now again at 5,900, and then consolidating again. Because what happens to the market, it drastically falls down, but bargain hunting only gives us like 10 points above. So it doesn't really go up as much, or a technical rebound doesn't really retest back to those levels at 6,000. And what really happens when,
What are you then trying to say, Jasper, that the bargain hunting is short-lived and eventually the PSCI will follow where the peso goes?
Well, with the USDP, with the currency, what happens really why the market falls is really because we've already noticed this from a few days from now, last few days, last few weeks, even year to date, we've seen really the foreign are already net selling at this point. So what happens is when, say for example, I'm a foreign investor, I have a USD, and then I invest across the board in the Philippine index at, say the currency was at 55, 56, 57. And then, as the market performance today, it's down more than 6% year to date. So you already lose capital appreciation. And now with the peso reaching at 59, you're also losing at your Forex. So there's a little to no upside anymore as you invest in the market. So the foreign continues to sell day by day. And then, the bargain hunting cannot absorb as much as this is what's happening. So that's
Exactly.
really, yeah, so it's not as much, when bargain thing happen again, it's only like a 10 points, 20 points increase. But with the foreign sales, as much on the board, it's going down 1%, going 80
Well,
points
something
down.
big is going to happen in the next 48 hours, and that's the Federal Open Market Committee, the Fed, deciding in 48 hours. Could that change the flow of the peso, the direction of the peso, and the interest that people have, given that we're also going to have to think about the interest rate differentials?
Yeah, so, currently, I guess everyone's already pricing in this Fed cut. I guess CME Watch already pricing in a 99.9% of Fed cut by, I believe, later 2 a.m. But what happens is, with the Fed cut happening, when the USD falls down, and maybe a consolidation or support will happen for the USD PHP, maybe it falls down back to 58 level. But we will have to see what happens next in the first next few months when BSP may be cut, and then hypothetically, let's just say when the Fed cuts and then the currency supports at level above higher 58 levels. But if the Fed cuts and it sustains at 59 levels, it would be worrisome for the BSP, if it cuts more in December, it might go hypothetical to 60 per year end if it happens.
And if that happens, because further rate cuts would mean further pressure on the peso, might that constrain the Bangko Sentral from cutting then in December, even as the Fed cuts rates in 24 hours?
Yeah, certainly. Currently the interest differential is about 50 points to 75 points, and if they cut the 75 points, and if the BSP cuts by December, that's going to stay flat at 50 points. But then again, if the currency continues to depreciate, even if the Fed cuts, putting, say, the peso by, let's just say, December or last few weeks of November at around 59 level, it would be worrisome if they would cut, leaving that a little room for the BSP to cut further. Because if it reaches 60 levels, then, fluctuations or outflows of USD across the market might just happen.
Well, looking at banks right now as a barometer of the Philippine economy, as you know, Nomura's already cut its GDP forecast for the year, but the rating agencies are still standing pat. How are you assessing the bank earnings so far and what they say about the economy? We've heard from BDO, BPI, Union Bank, among others. How are they doing in terms of net interest margins as interest rates come off some more, and the NPLs as the infra spending slows because of the corruption allegations and investigations?
Well, certainly, the top banks, the big banks, relatively doing okay still. Inline earnings, little over than 5% or low single digits. It's quite in line. But, the lower, or say, banks that outside the top three are gaining more than 20% or higher double-digit growth. And as a barometer, really, we've just seen across the banking sectors, really, is the consumer loan growth. It coming from the rate cuts. Even though that the net interest margins is quite still in line despite the rate cuts, though, the margins are getting lower just because of the rate cuts, but it's partially offset with the loan growth coming from the consumer loans. So I think it's quite effective what the BSP has done. It's currently consumer loans now getting higher. Everyone loves to spend, getting, assets or items at a lower interest rate than used to before. So currently, it's really doing well, but we will have to see what happens with the GDP when the third quarter GDP comes out. If it really comes low, higher than expected, then BSP might have to do something when it comes to their meeting coming
All
later
eyes
this
now
year.
on that November 7th GDP report. Thank you so much for your insights. Jasper Ondap of Regina Capital Development Corporation. In corporate news, analysts say Maynilad's planned initial public offering is expected to boost interest in the local bourse and help lift overall investor sentiment. BDO Capital President Eduardo Francisco told Business World the listing puts a spotlight on the country, noting that strong demand could signal renewed investor confidence. Corporate Finance Head Gabriel Lim, meanwhile, said the IPO size could serve as a major catalyst for market activity. Maynilad's IPO is the biggest this year and the largest since Mondanisin's listing in 2021. The offer runs October 23 to 29, with trading set for November 7 under the ticker MYNLD. Maynilad and Signal, the owner of this channel, are both part of the MVP Group. And before we go, the Samahang Basketball ng Pilipinas, or SBP, has unveiled its new board of trustees. This comes after the ratification of the Federation's updated bylaws at the National Congress earlier this year. Under the new structure, the board now has 17 seats, with 13 elected by active members to ensure broad representation across Philippine basketball. The remaining 4 seats were filled by the board, including 2 presidential appointees, a player representative, and an interim 3x3 representative. Notably, 10 of the 17 trustees are first-timers, signaling a fresh direction for the Federation. The new board immediately convened and elected its officers, led by Adel V. Pangilinan as chair, Sheikh Abal Revilla as vice chair, and Ricky Vargas as president. Vargas succeeds Al Pandillo, who remains on the board as a FIBA Central Board member. And that is it for Money Talks. I'm Cathy Yang. On a day the Philippine peso falls to a fresh low at 59.15 to the dollar. Catch us again tomorrow, 9:30 a.m. Kapatid, we are One News. All sides, all the time. Have a great day ahead.